Okay, I'm gonna do a daily and weekly analysis of MNQ and MGC, Nasdaq and gold. So we're gonna start with the Nasdaq, the MNQ. This is the daily chart. What do we have? We have a very long rally since April. Very long. And what do we have? Let's draw some bottom checks. Can we draw a bottom here? No. So we only have, if you want to have a reflection point, I would say we have this low here. This low here. Let's do this. It's a little bit hard. Let's do the bottom here, bottom here. Kind of like that. Let's zoom in and see how we got that. That's pretty accurate, right? Let's do it even better, like that. So we have some wicks, a bottom, some wicks in this channel. So we only have 2 inflection points since April on this long channel that I would say, let's make this green, because this is resistance, or no, support. This is support. And we're not near that yet. We are not near that yet. We have been very far from this support line. Look how far away from it we are on all these. So we have been in a very strong rally. Look how nice EMA 9 is holding. We came down, touched EMA 25, bounced strongly from that, and then we have kept above 9 EMA all the way. So in late July, we come down strong. We had the ISM manufacturing, PMIs, earnings, tariffs, core PCE, price index. The month before that, we had the ADP employment, GDP, FOMC rates, and Fed Powell. So all that gave a sentiment of uncertainty, so the market did go down hard. We did bounce. US factor orders, PMI, US trade balance, ISM services. It's in the future, but okay, we bounced. Now we have some uncertainty in the market again. Trump is jabbing, the Fed is not cutting rates because we're still seeing sticky inflation. The jobs report has been declining. Less jobs is creating, more are relieved from work. So it's an uncertainty that creates this sentiment down. And it's 3 days in a row red, and every day we're going lower. We see lower highs and lower lows. So I would go in to next week with a sentiment that we are still in a down move, but we don't know. So let's just briefly go into the weekly to see that this week candle all-time highs. We have a very, very long wick to the upside. We also have a wick from the downside. Week low, all-time highs, week high. So the week before this was incredibly strong. Very strong. It's not common you see this strong. Here is another strong. Then you see this red and some smaller greens along the way. And we reach all-time high now. And we've never really been up here. So it's uncharted territory to the left. And with a market that is uncertainty, yeah, we're still higher from previous week's high. I would have liked this weekly candle to actually become red. That would give me more confidence saying, yeah, we are probably gonna see more downside. But this is not a evening star or morning star. This is a uncertainty balance from buyers and sellers. So next week, we could see bouncing up. I would be cautious saying we are gonna do new all-time highs though. The EMAs on the weekly are still gapping really bullish. The 9 EMA on the weekly holding very nice. We came up above the 9 EMA. We did bounce it and then strongly bounce, came back to it and go up. And now we have, previous week we were bouncing back strong from the 9 EMA. So is it possible we're gonna move higher? Sure. But also, maybe it's time for a little pause. Let's check what we can find. This is a strong rally and a long pause sideways. This was a little shorter for a pause, but the broader picture here is that we come up here before a longer pause. So with that in mind, this rally is, look at the trajectory of this push and this push. The equals are back here in December. But we have rallied all the way up here very fast and we're in August. So the trajectory should be in December. So I would say that we are going in for a pause in a market. Might go sideways, slowly down. We need to visit at least 9 EMA again, maybe back in September when we have the Fed. Are they gonna cut or not the interest rates? We could also see a September hard down because we have this uncharted territory, a daily fair value gap. We did have this gapping up though, but this candle, wait, that's wrong. Oh, I'm in the weekly, that's why. Well, let's do a weekly instead. That's more, isn't that better? Let's remove this. But this is a weekly fair value gap. That is even better. Let's keep that. So maybe we want to go down, revisit this uncharted territory to find new buyers. And we could do that by September for the cut. And then the Feds are going to say something that makes the sentiment going to be good for the corporations again. And we're going to see a rally. I don't know. My bias on the Nasdaq is to the short side, but it could also be a range sideways action. And we don't have a range stable yet, so we need to confirm this by what is it going to look like next week. So we are going to go into the daily again. We could do this. This we can delete. We don't know the trajectory of the downside. Down move can be very explosive, or they can go in range sideways slowly down. So we do have 3 days in a row. Let's do this instead. Three points. Let's do this red, since it's a resistance. And we can remove this. Above this daily candle, of course, there are stop losses. They probably, I would say, the one who had stop losses here, if I would trail, I would trail my profits. So I would trail it down to this, actually. Trail my profits down to this. So there is not much more stop losses here. They are here now, upon these daily candle. That's where the hard to break stop loss will be. If we break this high and not immediately sell off, I would say we're gonna go push for the all-time highs during next week. If we break up above this daily candle. That's my opinion. If we hold above this zone, we might go see all-time highs again. But I don't see us push really strong through this channel here. We'll see. If we go down and downside, you have the 9 DMA, daily EMA 9. We have seen that hold a lot of times. We do have a small daily fair value gap down here. So we might go down here. That's also where EMA 25 is. So if we take some days to come down here, the EMAs will be up in this daily fair value gap and we will bounce into it. And I would say we might rally from there. Weekly 9 is all the way down here. It's gonna be really tough for the price to move that low, but maybe, yeah, in weeks we might come down here. We'll see. It depends on how the news and reports will be. But I will go into this week ahead with a bearish sentiment. I will look for rallies so I can short into it. If I see a break of this trend channel to the downside, I will be cautiously waiting to see if we go up and tag these stop losses. And what happens after that, we will see. This is a bearish candle. We did see buyers stepping in, but I would say we can rally up maybe to this channel, or we just go with a 50 fib on it. That will be somewhere like here. Zooming in a little bit. Not a clear view. Let's actually drag it out. So the 50 is here somewhere. That's 50 fib. Let's actually, can I please get into writing fib 50% daily candle. Keep that to the right at the top. Save. Remove this. Wait, actually, do we have any other? Never mind. Okay, that's the daily. We also have a lower low kind of channel here. I can do this green, light green. I do lighter greens on the bigger picture, and the narrower I go, the more green is the colors. Okay, so we have this channel that we can keep track of. It could be a good measure. If we see the next candle, I want to see some up move, so we have a wick on it. Maybe we come up to the 50 and then we go down. So I would be looking to take a long trajectory profits around. This is the zone. Let's keep a little bit above. So we have this zone here for next week. We will bounce into this channel low or go to the bottom of this low at least. If we break through this, well, then we can see price move. Let's see, this week low. What do you mean this week low? Was that this week low? It is, okay. So we might break this week low then. This channel is holding up right slightly above that. So maybe we see that as the max. Look at this. This is a zone of stop losses also as well. Longs. Stop loss zone, I would say. I'm gonna do that orange. So below last week's, we have stop losses. And I would actually go and put that in as well. People tend to trail their stop losses for weeks or daily. For the real long term, the weekly stop loss zone is down here and the daily as well. So how big of a stop loss zone? Let's see, we have 95, 595, 85, 75. That's about 20 point of stop loss below the ticks. That's probably where it is, right? That's a good zone. So if we break the lows, we will come into this thick area of confliction here, where the buyers will defend and try to take back control. So if we break below here, we might very well go to visit this daily fair value gap during the coming days or this coming week, in my opinion. Didn't I draw a very long channel as well? Did that got removed? from this low to that low. Let's see. I want this channel to exist. Feels like an important zone to hold. Like that. We come down, touched it. And let's check here. That's gonna be in confluence. Look, with this zone here. This is a zone of targets for the shorts. And this stop loss zone is right in the middle of beginning of next week's try for the sellers to come down, right? That's an excellent point to look at. Look how many conflictions we have. This bottom channels, we have this long trajectory of where buyers are defending, and it's also a stop loss zone where buyers want to defend. And we will be below the daily EMA 9, but not as far as EMA 25. I think this is a perfect bounce area down here. Excellent. I will actually do this. This is day 1, and Tuesday we are in here. Monday could be a very bearish day. If we come down and test the stop losses here, bounce back. Tuesday we will retest it, but we will not go lower low. Maybe we do a higher low, or we break. If we break, we will come down here, and if we break this long, we don't know what's up. We need to then go into bear market territory, in my opinion, or a bear range bound market. So we could see an expansion of this, like we're going down, up, down, up, down, up, a very, very big bearish market. And then we finally break to the upside ahead in future in September, maybe when the Fed is going to decide what they want to cut or not. Great. I think we have a good bias for next week. Do we even have a possible trade to take? I did have this wiki area. This was the big news PPI. We came all the way down here. And this week we broke that PPI even to the downside here. So this is the 4-hour. Look at this channel. Nice break here. We came down, up, manipulated up, and then we go push hard. Came back up to this high of this channel. We came down. So I think this might be a good area of where sellers might step in again. And that would mean 50% fib daily candle. We have this zone right above it. So we might be looking to go short in this area. Let's make that light. It's pink almost. Sellers might step in. Let's put that inside center. I can't do top. I want this text to be on the top. Okay. Never mind, it's fine. That's where I would be looking to go short from here. Now price might move all the way up here in this red long zone. I would be wary if this red zone gets broken to the upside. We don't want the candle to hold above this. But this, remember, this is the 4 hour. So if you want to do, let's say the price come in, we do go short here. If you want to have a risk above this, yeah, you need to be aware of this. So let's say we are looking for a exit somewhere around in this zone here, for the daily in this conflict zone. That's a 3.52 ratio return on the 4 hour, and we have a risk of 63 points. That's 63 points in the Nasdaq. If you want to cover a max of $250, you can only go in with 2 micros. 2 micros. But the 200-point winning would give you about 800 in profits. So you risk 250 to get 800 if you can hold for the whole day. That's the point here. We're going to hold into this, diamond hand it. And I would say, if you go in with 2 micros here, you sell 2 micros here, price moves up to this zone. You then add in, I'd say 2 or 3 micros more. But you keep the stop loss. Your average will then be here. And suddenly you have almost a 7 ratio of return with only 5 micros. And the risk now is 36.5. Let's say 35 point. Yeah, you're risking about $300 then if it comes up here. But the ratio of return for 5 micros with now 250 points, yikes, that's a lot of dollars. That's $2,500. And you're risking 300. So I would say that's a very valid trade to take, and you won't sweat it because you lose $300. And if it comes up here, you don't know what's going to happen. It can come up to the stop loss zone and then drop, or we can continue up. But you shut it here above this trend channel. So that's what I will be looking at. I will definitely see that as a valid. So let's say price come up here at in this zone. We have the 50 daily, EMA 9. I will looking to go have a gap here as well up to this candle. No, we don't. This covers that. We don't have any gap here. No gaps. No gaps really. So we don't want to miss this. So maybe 380.70 could be a target. Too MNQ, too short. You now have a risk of 65. 65 is $260 with 2 micros. So your stop loss is up here. We mark this red. Stop loss of short trade. Great. If price come up into this red zone, about, I would say, well, this is between when UK will open and not close, but so maybe we have a confluence around here. I'm gonna mark this yellow, and we're gonna do a 3 MNQ add to shorts. Do this yellow. And our average will then be somewhere around here. And we're gonna trail. If this is the case, we need to trail our stop loss. We don't want the price to move above this channel by very much. So we will trail stop loss, trail of shorts, add into this trade. If that makes sense, I don't know. And that will give this down. Oops, I want to drag this. I want to drag this. That keeps this trade with a 30-point stop loss. 30-point stop loss with 5 micros is $300. So that's perfect. That's exactly what we want. Our target, however, remains for the day. We could scale out if we want, depending on how we see price act. If we see a stability of the price on the shorter time frame go here, and we don't think we're gonna move past the EMA 9 or something for the day, we could take profit here, since we can't hold the trade overnight. Because on Tuesday, August 19th, we might go up again before we go down. And then we can add a new short. This is my play. I will wait for price to come to me. If we start on Monday and we drop, and I don't see any kind of recovery up in this zone, I will not be interested to join any shorts. That would be too risky and foolish. Instead, wait for the price to come into this area and then look for longs for a bounce. Great. Let's move on to gold. Gold, let's look at the weekly. I made some terrible, I was very long biased this week. Or at the end of the week, I would say. When the PPI showed was hot and we saw NASDAQ come in lower, I thought now we're gonna look for longs in gold. And I did. And I got some good longs, but then the price just returned back to and lower to stop me out. Very annoying. So let's see. This is weekly. I have a very long blue channel here. Bottom, bottom, top, bottom, top, bottom, top. Came above it. Now we have been range bound since April. Crazy range bound. Is this a topping area? This is the range since April. Extremes below, yes. But come back, go lower, come back, go lower, come back. Maybe we now, I don't know. I think this is, I think this is the low. Or at least 1 to 2 months. That's what I think. This is also, I have a fixed ranged, you see this red top and bottom, that's the value area that we have been bouncing from. We wicked from this value area low up to this value area high, extremes, back to the low. We came in and wicked this value area low here. We hold, we didn't touch below this zone where previously stop losses were held. Weekly stop loss. They have now trailed it up to this, I would say. We can also see to look into this maybe a little bit. It might be a little broader. It's not much to trail here. So maybe they push back. Somewhere in this area we have a very strong support, I would say. To break this, it's gonna demand a lot. So I actually think this is the low for at least 1 to 2 months. And I think price is gonna move and break above this line here. A break above is strong bullish. That doesn't mean price can go lower again, but price moves in wave. Like we come up, we break this, we might break all-time highs, but then we go back down again and revisit maybe this support area. This topping area becomes support, or we go back and bounce into this blue line again, and then we break even higher. My bias on gold is bullish as long as Nasdaq and the uncertainty in market is failing. To me, that's bullish in gold. So this is a strong weekly bearish candle. Indeed, it is. It's really strong. We've seen this strong candle getting a little wick down and then strong bull. So maybe we will come down slightly this week. And then we go up. So I want to look for longs. It's a big area. It's a very big area. So it's hard to predict. We need to go narrower. Let's mark in this white. That's priv week low. And this is priv week high. Let's go into the daily. I was trying to long gold. Price came back and stopped me out every time. So the sellers are still very strong, which amazed me. Really did. we've had a huge rally in gold. Huge rally. So it is possible that we will get, everyone is so bullish on gold, I think. But that means maybe the buyers want a lower price. So gold will look to come down more, or even down in September. And then we will go up. It's possible. Nobody knows. If we break this low and crack into this stop loss zone, I'm gonna be hittish of look for longs. This is where buyers will step in though and defend. So we will probably see a bounce from here for sure. So looking for longs. It's a big zone though. It's a very big zone. Let's say we're looking for longs here. $50 to $5-ish. That's a $45 area. $45. You can't even cover that with one micro. $45 is 450 quids. So if you buy in here, you want to have a stop loss down here. That's 450 point risk with only one micro. This is the weekly though. And we are day traders. At least I am. So I need to think how to profit during the day. So prices have come down to this blue channel, bounced, blue channel, bounced. Below blue channel with bodies, not wicks this time, bounced. Now we're coming back down again. And we have a body inside, a red body. So on the daily, we have a small gap to fill still here. Daily. Fair value gap. So maybe this is what we look for. We want the price to fill this gap. Look what happens below here. And if we wick back above this, and we want the body to actually be kept above this fair value gap. This is the daily though. So we need to go in even narrower, 4-hour charts. Each candle is 4 hour. So having a wick and this big of a price on the 4 hour is probably not possible. And if you see on the 4 hour, we have a much deeper fair value gap. It was this deep, but we moved in here. We're at the top of this fair value gap here, and we are looking to go lower. So look at where this confliction is. It's right here. 50% of this fair value gap is around here. We could measure with the fib. And the 50, yeah, look at that, 50. 50 fib, 50% daily fair value gap. So if we want to enter, with a long at this level to just go up and up and up. We need to look for this area to cover. We can't really do that. $50 of drawdown. That's insane. That's insane. Even if you go in with 1 micro, we're down $500 if we go all the way down. And if we add, if price comes in and fill this fair value gap, like here, we're still $30 of risk. That's 300 quid. That's manageable. So if we take 1 MGC long, and you don't want this to be breaking, that's where your stop loss is. Stop loss of long MGC trade, $300. That is very much acceptable to take whatever the day might give you from a bounce up here. You're going to hold it for the full day and try to think of today we're not going to reach higher. So you cut the trade there. But you should at least get a 2 ratio return. 2 RRs at least. That will bring the price also back to the daily EMAs, which is a very possibility it will do. So we might have to wait and see the price action on gold on Monday before we enter any trade. If price go to this like low here, and we see price jump over this again, a boost, break of structure will happen. Then you might want to let the price move. That's the hard thing with gold though. If it moves, it can move and not look back. If you see price come down here or just go from here and go above and break the structure, just look for the slightest move to take a long maybe and keep the price below. And whatever risk you're putting, you need to count in how many contracts, the contract size you add. But you want to look for a 2 to 2 R, and that's going to go pretty high up in this. You're going to break this structure again if you're going to do that. That's another break of structure. Can we break 2 structures in one day? Yeah, we can do that easy with gold if the buyer is stepping in. So right now, taking a trade in gold, I'm not seeing unless we come all the way down here. The risk is managed. Also, if price comes here, there's nothing that says it will continue and break this low and continue down. That's why you want to manage your risk and accept $300 loss. You have 1 micro gold in the trade. If you don't see any kind of bounce in this area up strong, and slowly zombie grinding it down, it's hard. It's hard to keep in with the trade. But that's kind of what I'm seeing. Let this big daily fair value gap, 4-hour fair value gap get filled. Might take the full Asia and part of Europe market to break down all the way, unless we see the price start moving up from here. It's possible. Or from this, we fill the daily gap here, and then we start to see price move up. Wait for an opportunity for a bounce and look for the RSI to look and peak up. Then you might want to get a chance to get in long here with a risk below this pivot, the daily fair value gap. That's more manageable, $12.5. It's still a lot, so I wouldn't go in with more than two micros if you want to keep a low risk. My risk per trade is about $250 to $300. So I need to base all my trades contract size based on the risk. All right, that's gold. A bit natural on gold. Wait for an opportunity to go long. And Nasdaq, wait for an opportunity to go in short. Unless price already moves strongly below here, look for a long, for a bounce. Great. Have a great week. I will live stream my trades during UK session and US session. And yeah, stay safe and see you on Monday. Bye.